In January, I made some huge changes to my stock portfolio, and I mean huge changes. Already in January, I released some videos which talked about some of these changes that I made. I sold out of a load of my US stocks. I've been investing £50 per day into an S&P 500 ETF, but I've not shown what that's done to my whole portfolio. So in this video, we're going to take a look through my whole portfolio, show you what has changed, how my portfolio looks now after all these things have happened, and also just give you an update on where my portfolio is at. Talk about some of the dividends that I've received in January. Let's get into the video. So my portfolio is split across two different platforms, Freetrade and Trading 212. First of all, we're going to go take a look at Freetrade. So if we just go into the app, we can see here at the top that my portfolio is sitting at £12,924 in Freetrade. And if we scroll down here, you'll see that I've got 5 individual stocks and 1 all-world ETF. So one of the things I said at the start of the video was I sold out of all of my US positions. And the reason I did this was I'm currently doing a portfolio transfer from Freetrade over to Trading 212 for the sake of saving money. So Freetrade actually charge a lot of money to have a stocks and shares ISA with them, and Trading 212 don't charge anything. There's a few transactional fees, but Freetrade also have that. And there's a few more benefits to Trading 212 over Freetrade, and that is the reason why I'm moving away from Freetrade. But it's taken me quite a bit of time to get this portfolio transferred across. It's been about 3 weeks now, and I'm still waiting for Freetrade to get back to me to actually get this transfer sorted. I made a video about selling out of my positions and sort of the in-depth of why I sold out, the cost of selling out versus the cost of transferring over to Trading 212. So if you want to go watch that video, go check it out right up here. But let's get into the portfolio. So in Freetrade, I actually have £1,500 in VWRL, which is an all-world ETF. I have £1,250 in Unilever, £1,050 in GSK, £951 in Lloyds, £805 in Tesco, and £784 in SSE. So over the last month, I would say we've had a bit of a rocky time with UK positions or with UK stocks. So if we go take a look at Unilever, for example, there's been a few dips and a few rises in the stock value, but overall it's actually gone up. Same with GSK, where the stock was trending down. So you can see here around the middle of January, the stock prices were trending down. And then since around the 15th of January, 14th of January, the stock price has actually gone up. Lloyds is around about the same, where around about the 14th and the 15th of January, the stock price went up. And then Tesco, roughly the same, although they haven't fully recovered in January. And SSE, as you can see, it's the same sort of picture. So what actually happened with the UK on the 15th of January? So in January, around about the 15th of January, we actually saw good inflation data. So that's probably the reason why all of these stocks rallied a little bit towards the end of January, the inflation news. This also indicated that there's probably going to be more rate cuts from the Bank of England in 2025, but we'll have to wait and see. Just to give you a quick glimpse of what I actually sold out of, if you're not aware. So I sold out of my shares in Google, Microsoft, Realty Income, Amazon, and Pepsi. Just to give you a brief understanding of why I sold out, the transfer from Freetrade to Trading 212, Freetrade actually charge you £17 per US stock. In the video I made talking about this, I talked about the returns and why it was more beneficial for me to sell out rather than to transfer them across. But these are the shares that I sold out of, and it came to around about £6,500. Anyway, that is my portfolio on Freetrade. Now let's go take a look at my portfolio on Trading 212. My portfolio on Trading 212 is sitting at £12,725, and I currently have a total return of £1,475 or 23.7%. As you can see here, I'm currently doing a portfolio transfer from Freetrade, which I spoke about earlier in the video. And my ISA allowance, I've used £11,250, and I have a remaining £8,750. My aim is to use that up by the end of March, before the tax year reset. I also have £1,200 sitting in cash, which I recently just added £1,000 to this. So that £1,000 or £1,200 will probably get mostly entered into the stock market. But if we now take a look at my investments, I have £11,525, £3,290 sitting in Visa, £2,877 sitting in VWRL, which is the same as the one sitting in Freetrade, so it's split across the two platforms. I also have £1,696 in Rolls-Royce, £1,560 sitting in an Invesco S&P 500 ETF, and this one specifically is G500, which is the hedged version of the ETF. I also have £852 in the Franklin FTSE India ETF, £756 in my PI, the S&P 500 Everyday ETF, which is the video series where I'm investing £50 per day to see the effects of investing every single day versus lump sum investing. I'll go more into that in a second. And then I also have £490 or 3 shares sitting in Google. So let's just go through these positions really quickly just to understand how they've been doing over the last month. The Visa, I have 12 shares, up 27.52% or £710. And if we go into here over the last month, they're up 7.62%. I think generally they've performed reasonably well since around the middle of the month. I think this was also to do with inflation from the US and the fact that they held interest rates. So interest rates are going to stay higher for a bit longer. Also, towards the end of the month, they had their earnings, which they reported good earnings. Although they saw a little bit of a dip on the last day of the month, I think their earnings were good, and generally their stock price should actually return more over these coming months. And then I have VWRL, which I've already gone through, up 4.5% this month. Rolls-Royce, which is up 6.58%. So same sort of thing with other UK stocks, where after around the middle of the month, when inflation data come out and the news about possible interest rate cuts, they performed quite well. Then we have the S&P 500 ETF. If we have a look over the last month, it's the same sort of story. After the inflation news come out, the stock market went up, but around about the end of the month, we saw DeepSeek AI that sort of took a dump on the stock market, where Nvidia was down 17% in one day and other tech stocks were down, which really drove down the S&P 500 or the US market. But after that, the stock market recovered a little bit that week. Then I also have the Franklin FTSE India ETF, which didn't have a great month, down 2.3%. Not entirely sure why India isn't doing so well. I think this could be off the back of tariffs and stuff like that, stuff that's coming into the US, but I'm not entirely sure. I think Trump overall should benefit the global economy, but it could actually be a detriment to the global economy and only trying to boost the US economy. Google over the last month up 7%. They're sort of following the general trend of the stock market, where after around the middle of the month, the stock market rallied. They took a big dip around when the AI news came out. They've since rallied, and also they posted reasonably good earnings this month as well. Now let's just take a look at the £50 a day pie, where I'm making a video series where I'm investing £50 per day. So I've invested £750, which is 3 weeks or 15 days. So if we just take a look over the last month, my rate of return is 2.4% or £6.81, which isn't bad, and it's also not particularly good. I think the stock market has done quite well over this last month. If we go take a look at the ETF itself, which is the Invesco S&P 500 Accumulative ETF, or SPXP. So this is the non-hedged version of G500, which is what I also have a holding in. If we have a look over the last month, it's returned about 4%. So if we go back to the pie, I've returned 2.4%, or my rate of return is 2.4%. My return in general is 0.91%. We can actually tell that investing every single day isn't beating lump sum investing. But that is the point of the series. That is my portfolio on Freetrade and Trading 212. Now let's go take a look at the portfolio all consolidated together on my spreadsheet. All right, so this is my portfolio on my spreadsheet. As you can see, I currently have £7,780 in cash, which is mainly the US stocks that I sold out sitting in Freetrade. I'm waiting for that to be transferred over to Trading 212. The portfolio value is sitting at £17,887, which has dropped significantly because of the big sellout that I did, which gives me a total value of £25,667. The thumbnail of this video is probably going to be something like £25,600 or £25,700. It does include the cash that I hold in the account. That money is going to get reinvested, but it's just that currently it's sitting in cash. I have a total return of 29%, which is kind of ridiculous. I think the last time I made an update, it was sitting at around 17-18%. So I've had quite a big return over this last month or so, a big jump up in return. And that return equates to £4,162, which is made up of £3,500 in gains in the stock market and £625 in dividends. So you can see down here on this graph, I've invested £14,350 with a gain of £3,500 takes me to £17,887. And then I have cash of £7,780 taking me to £25,667. The portfolio is made up of 41.4% ETFs. That's creeping up and creeping up. It's closing in on the 50% ETF goal, which I have over here on the left. It's also made up of 37.1% UK stocks and 21.5% US stocks. Now, my US stocks position has dropped significantly, and my UK position has creeped up only because of the fact that US has come down. But you will notice that my portfolio is currently made up of 30% cash. So that is quite a big portion. It's actually more than my US position. but eventually that 30% will go into the stock market, probably into ETFs. I don't expect to be picking individual stocks at the moment. If we take a look at this graph down here, you can see that my biggest position is VWRL at 24.5%, then closely followed by Visa at 18.5%, and then it's Rolls-Royce at 9.5%. So I do have two dominant positions in the portfolio, and it gets smaller and smaller as you go around the pie here, leading to Google at 2.8% as my smallest position. If you're regular viewers of the channel, you would know that my three biggest returning stocks were Amazon, Google, and Microsoft, and they were roughly around about 50 to over 100% for those three positions. But now that I've sold out of those positions, they don't have that impact on this graph, which is the win-loss graph. So you can see that my biggest winners are Tesco and Lloyds, which Tesco is sitting at a return of about 48% and Lloyds sitting at a return of 36%. And then I have a few other stocks sitting at around that 20 to 25% range, which is Visa, Rolls-Royce, and Unilever. And then I have a few other smaller return stocks, and then a few negatives, which is the India ETF and SSE. So now let's go take a look at dividends. The dividends that I received in January, I received £27.53, which brings my year 3 total up to £178.68. So you can see at the top here that I have total dividends for 2022, 2023, and 2024, which is £15.29, £216.46, and £363.51. Now, my dividends haven't really been increasing that much, simply because I've moved away from dividend investing more towards growth and ETF investing. I think now that I've sold out of some of my US positions and some of my dividend paying US positions like Realty Income, we'll see more that I'm actually getting less dividends and my dividends per month will decrease over time. I'm working on making a more consolidated version of this spreadsheet so that there isn't a big focus on dividends going forward. It'll be more of a dividend tracker as opposed to a dividend dashboard. So if we come over to the transactions tab, which shows me the amounts that I'm investing into each position each month, we can actually see that for the month of January, I was actually negative £4,860, which means that I sold out of a net position of £4,863. So I sold out of Microsoft, Google, Realty Income, Amazon, and Pepsi. But I did add two positions like VWRL, Visa, Rolls-Royce, G500, which is the S&P 500 ETF, and the £50 per day ETF, SPXP, which I added £750 to throughout the month of January. We can also take a quick look at the dividends that I received. So on the 6th, I received £7.47. On the 9th, I received £11.25. And on the 15th, I received £8.81. And if we come across to the calendar, we can see that I received £11.25 from GSK, £8.81 from Realty Income, and £7.47 from Pepsi. So going forward, I won't be receiving a Realty Income dividend, neither will I be receiving a Pepsi dividend, which to some of my viewers, I hope is not too upsetting to not be watching my dividends come in. It's just the change that I'm making for the benefit of my portfolio. Hopefully it's the benefit to my portfolio anyway. If you've made it this far into the video, I'm just going to give you a quick sneak peek of the gains that I made from the sellout from my US positions. So I made a video on this where I went in depth into each of the positions, talking about the impact of the selling fees versus that £17 for the transfer fee. But if we just take a quick look, I had 5 positions. I had invested £5,122 and I returned £6,386, which comes to 24.7% or £1,264. If I include dividends, it comes to £1,446 or 28.24%. So this is the info tab where you can see an in-depth view of each of my positions, and you can see an in-depth view of the positions that I've sold out of. If you'd like to get this spreadsheet, you can sign up for the newsletter where every single month I send out a version of this spreadsheet where you can see in depth all of my positions, and also you can use this spreadsheet for yourself. I also give updates on my YouTube channel talking about the videos that I'm going to be making going forward and the progress of my investments. So the goals for this portfolio: I want a £50,000 portfolio, which I really want to hit in 2025. I think that might be a goal that extends to April 2026, but I'm hoping that I can hit this in 2025 itself before the end of the year. I'm going to do that by maxing out my ISA in the year 24-25, which comes to an end at the start of April this year. Like I said earlier in the video, I'm about £8,500 away from hitting that goal. So how am I actually going to hit that goal? The point of this is investing from my savings. So I had around about £7,000 in savings, and every single month I'm hoping to increase my investment in the stock market to hit that goal So my long-term goal for this portfolio is investing for 10 years. Now, I've always said on this channel that if I've been investing for 10 years, then I'll probably be investing for the rest of my life, which is, I think, possible now. I think I've been investing now for over 3 years, and I think at this point, I probably will be investing for the rest of my life. I think at this point in time, I'm investing quite a large portion of my net income into the stock market. I'm trying to maximize my youth currently to try and invest as much as possible so that I can benefit myself in the future. And then my final goal of the portfolio is to make an ETF a core position of the portfolio. Now, I think I have done that already. My VWRL position is closing in on 25%, but I want to make ETFs 50% of the portfolio. They're sitting at 41.4%, and I think in the future that will make its way to 50%. And I think eventually it will make its way all the way to 75%, and then even around, I think, aim for about 90% would be a good idea for a large portfolio. So that is the portfolio. That is the update. How do you think my portfolio is doing? What do you think I should do with the cash that's sitting in this portfolio? Should I be investing it into the S&P 500, just put it into an all-world ETF, or should I dump it into some random stocks? I do have some ideas about what I want to do with this money, what kind of YouTube series I might set up in the future. So yeah, if you're excited for more content on this channel, if you're excited to see where this portfolio goes and what I do with my £7,000 in cash, subscribe to the channel, like this video, leave a comment down below on some queries or questions you may have about my portfolio, or just to let me know that I'm terrible at investing. Thank you for watching, and I will see you next time.